Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 21st. A couple items on the docket today. We'll start off with the weekly jobless claims. As you can see, it went up and higher than expectations. So this is the highest we've seen in a little while here, 293. So previous reporting, which was last week, 283,000 people applied for unemployment, and it was supposed to be within that same range forecast, and it went up at 10,000 to 293. On the other hand, we also got the Philly Fed, which is the manufacturing in the Philadelphia region. We've been seeing some struggling numbers between them and the Empire State Index, which is the New York region. And we're still seeing contraction mode there, but a little bit of improvement there. Still have 10.2, which we got back in December. We exceed better than our expectations of -6, and went up to 3.5. So still negative, but a little better than the -6 or 10.2. So a little bit of improvement there. Hopefully, once we get a little better weather, hopefully we'll see a little bit more in the manufacturing improvement as we kind of need to see manufacturing with our overall economy. See some improvement there. Stock market's up. A lot of it is made due to comments by Draghi, Mario Draghi, out of the European Central Bank. Basically, he kind of hinted that he will be creating some type of stimulus or some type of restructuring for March meeting. So it looks like something on the horizon for European. He made comments that it's worse than what they thought or initially thought, and they're going to need to do something a little bit more from them. It's going to take a little bit more from them to be able to try to drive that. So it looks like something is going to happen on the horizon in March. So that investors like the comments. Also, yesterday, trying to remember, they said that the Chinese bank, People's Bank of China, basically said they're going to put in about $61 billion into the economy, which they just did that today. So things are looking a little better on the Asian markets as well. Bond market, we're up for the day. We're down for the day, but we're up from where we left off yesterday. Yesterday we had a great rally, but as the stock markets, swung from like -500 plus, and the Dow all the way back down to like in the twos. It pulled money out of the bond market, but we're still way up there. We haven't seen these numbers since really around October of 2015. So we haven't been up in this range since around then. So this is the kind of pricing we're kind of seeing right now. What we saw back in October of 2015. So those are obviously good numbers, much better than what we've seen in the last few months. The higher up on this chart here, the better for interest rates here. So we're down. We're up about 3 basis points from where we left off yesterday. Is what this really translates to. All right, folks. You guys have a great day. We'll see you tomorrow. Also, don't forget next week we got the Fed meeting next week. So that's going to be probably the biggest cue for next week. Will be the Fed meeting. Now, they don't anticipate any rate hike at this meeting, but they're going to be watching the wording very carefully if there might be any for the next meeting, which is in March. So be very next week. Expect some volatility. Have a great day, and see you tomorrow. Thanks again for watching. Bye-bye.